In this video, we're going to talk about how and when I intervene with my algorithms and decide to take trades, or in this situation, not take trades, and what the pros and cons of that potentially could be. Now, to get started, we're just going to pop over here to StatsEdge Pro, and I'm just going to show you this is the algorithm that we're talking about, right? So on my website, if you go to statsedgetrading.com, you can see these are all the different algorithms that you can get. Currently, we're running 4. You can click on any of them, but we're doing the pullback one, and it will show you this is the equity curve from the year 2000. Here's what every year would look like, positive and negative years. You can see them all right here. Uh, not hiding anything. This is the return profile. This is roughly what it does, and then I have a video on all of the different algorithms. So this is sent on the weekends, Saturday or Sunday evening. And we have a Discord alert bot that alerts when prices are reached. So we got an alert on this Zeta. Now let's start with a weekly chart. This system is essentially just looking for very strong names that have some sort of igniting bar last week, so some sort of really strong bar, and then it's looking to kind of catch a pullback. So of the 10 names that are sent for this particular strategy, probably only a couple trigger unless the market is doing the same thing, and then you'll get more, but probably only a couple trigger. So into the daily chart where we watch these things, you can see massive crazy action last week. On Monday, had a little bit of a topping candle and then gap down, but it gapped down because of earnings. So there's a negative earnings surprise. You can just click on it. You can see it right here. And then sold off. And this is where the alert was triggered. So let's go into a 30-minute chart. This is kind of the lowest time frame I'll ever look at. And you can see right here, this is where the alert was. This is all algorithmically based. It's all done by computer, by systems that I build. So it doesn't know that there was a negative earnings surprise last night because this is sent out on the weekend. So I just messaged in the room real quick and I said, hey, this one I'm probably going to wait on. There was a couple other that I took. I said, this one I'm going to wait on just because there was earnings and because we're gapping, and I'm going to see what happens. Now, that is a decision that could go one of two ways. One, this could occur where, or three ways, I guess. This could occur where we sold off dramatically. Two, we could have just not done anything and just chopped around all day. And then three, it could have tagged our entry price and just ripped. And we've seen that before. It happens not all the time, of course. We wish it did, but it happens sometimes where it just tags our entry price and just off to the races. And by me not getting involved exactly where the system is, I would leave that on the table. But in this case, this is what I was thinking is that, hey, it had earnings, it's gapping down because of earnings. Maybe it's going to take some time to digest this. And I'm okay with the other scenario. And that's the main point I want to get across here. For me to say I'm going to hold on this one, I need to be mentally okay with the fact that if it rips, then I don't make the money on it that I would have made. So that's what you have to understand when you're intervening with systems like this. Um, just to summarize again, I didn't end up taking this trade yesterday because as we sold and sold and sold, we started to put in this range right here in the afternoon. And I messaged the room again and said, I still like the look of this one. If it closes above kind of 29.50, this area, I may get involved. You can see it sold off. So we're gapping up here in the pre-market a little bit. So the message I'm going to give to the room on this one is, hey, if we can hold this 29.50 for a period of time, I'll probably get involved. So what ends up happening is instead of buying it right here with a stop down here and holding it for a week and hoping that week turns out positive, I'm now able to buy it down here with a stop down here. So what have I done? I've reduced my risk. I've increased my potential return. However, what I risked by doing that is I risked the ability to have this thing just rip without me. And there was a couple names that could have done that yesterday, right? So some of the trades that I did end up taking, like I took TNK, you can see right here, and it was for a different reason, right? So it came down to this low. This is a shipper that came down from the same strategy. And the idea was we're looking for an oversold pullback into this range. This one's not the pullback algorithm, but it is the mean reversion system, which you can learn all about here. And I liked this one a little better because you can see it sold off in the morning. This is a 30-minute chart again. I found some support right here and started to bounce. So on this candle right here, this is where I ended up taking it. There was one I wish I could find. I'll find it later. I'll post it on Twitter. That actually came 2 cents from the entry point and then turned around and ripped. So the point that I'm trying to just make here is that it's okay to intervene with systems in a couple instances. You notice that I intervened to lower my risk. I didn't say, I like this one, so I'm going to double up on the size. I didn't say, I like this one, so I'm just going to completely ignore the rules and buy it randomly. I very clearly said on Zeta, right? I'm doing this to reduce risk because it has earnings, because it's gapping down. There was some relative volume happening as well. So I want to stay out of it. So I just want to show you guys that, yeah, even if you are a systems trader, a systematic trader, it is okay sometimes to let your human intuition come in, as long as you're okay with what can happen, right? So what can happen in this case is it could have hit 31.50, which was the entry, and it could have ended the day at $60 a share. Could have got bought out or something. And you have to be okay with that because you don't know. We're dealing with an uncertain future, and I'm no guru. I have no, key to the market in any way. All I'm doing is looking at the charts when the alerts get triggered and making a judgment call. Sometimes I'll be right, sometimes I'll be wrong, but because I start with a base that I have back tested, a base that has statistics behind it, and I know those statistics, I can look month by month and see what the strategy would have performed at. It really helps me get that solid base. So I'm not trying to scan the market all day to try to figure out what's happening. I have everything set up the weekend before, and I just sit around, wait for alerts to happen, and check out the charts when they occur. If that's something that's interesting to you, again, come on over to statsedgetrading.com, click on the StatsEdge Pro button there, and get started.